Okay. It was a wild ride this week. Mr. Toad's Wild Ride. That's the craziest movie if you've ever seen the Disney movie Mr. Toad. It is a ride at Disneyland. It used to be one at Disney World, and now it kind of is gone. It's where Winnie the Pooh is now. But you can see Mr. Toad in the cemetery at the Haunted Mansion. Um, Rest in peace, his ride. Um, well, it was a wild ride. I mean, in essence, this week we had a combination of things happen, and let me just start into the markets. We had this head and shoulders pattern, um, and we finally broke, kind of went down, and then now we've kind of broken out of that particular area since the head and shoulders, which was the expectation. I just didn't anticipate we'd come down here a couple times. But, so the Dow Jones Industrial, the entire week, every day was an up day. One, two, three, four, five, six, seven, eight, nine, 10. That's a pretty long streak. Probably look for a pullback at this point. It could go as low as it's got a lot, actually quite a ways that it could run down. I would anticipate probably somewhere along this neckline that was created by the head and shoulders at the worst. So that would be, in essence, oops, what is that? 3% pullback or so, which isn't bad. There's a lot of pullbacks are kind of in that 3 to 5% range. But if it did go more, it could get down in this area, or it could get all the way back to here. I'm not anticipating that. There's just a lot of momentum in the Dow Jones at the moment. Just getting a little tired for the 10 days, but you can see for the week, I mean, that's two huge candlesticks in a row on the weekly. So that's positive. But again, I'd expect the pullback as what we are seeing right now, with to a certain degree with SPY, not quite as much. We reached the top here. We had a little bit of a pullback. We're still only about 5% or so away from the all-time high, which is 480. And then the Qs is actually the one that had the largest pullback because of technology. Um, had Tesla reported this week. There were a number of financial reporting being done, and Tesla got beat up, Meta got beat up, but this is still a correction to be expected. Whatever, where do we stand now? Probably about 3%. Also, 3.25% down. Could anticipate. I'm looking for it to come down here to about 4.5% or so, or somewhere in this kind of green range I have outlined here, 368. So that 5% pullback, we start getting below there. Now we're talking about something complete structural difference. At that point, and I would anticipate would affect the larger picture. IWM, which is the Russell, I've got this chart pretty well marked up. We could see it come down to 193. It's been kind of on a tear here, kind of broke that trend, and we're getting a correction here. Maybe come down as far as the July 11th area in this green zone, and now you're looking at a pullback so far of just a couple percent. So I would expect more. I don't think it'll stop here. It may, and that would be about a 3% pullback at 194. I'm anticipating a little bit more of a pullback around here to, where we get about a 3%, but it can, come all the way back down to this area, and that's a 4.25%. there hasn't really been much of a pullback on the IWM since started this trend. So, these are things that, you get the stair step type of environment where you go up and you come back down. Now you've gone up quite a ways. Now you need to kind of digest that movement up. The yield on the 10-year, we had all this nice thing happening last week where it came down, the rates came down. It bottomed out this week and then made its way back up, and now we stand against this resistance level here. And the dollar made a little bit of recovery. It went down pretty hard, and expecting some kind of a dead cat bounce here. It's above this resistance zone at the moment. I would anticipate, it could go up here. It might start to make a U-turn. This is only 1 day's rates. So, if it confirms above that, then like I said, then we could probably look for it to come up to maybe 101.5. But expectation still is that that'll roll. We'll hit some resistance again down here, but we may get a candlestick like this and rocket right through 99.5 on the way down to a target of 95 is what David Hunter has thrown out. Some are anticipating it going up, so just be aware. And then crude oil kind of making a bit of a comeback since it broke out of this pennant. I think the expectation is, again, it could maybe run up to 80 or 85, maybe even 90, and then eventually roll over. The VIX is just kind of hanging out. I mean, it really didn't make much of a move this week. I'm sure if we look at the weekly, that's what's called a doji, and we have this bullish engulfing candle here, or excuse me, bearish engulfing candle. So still, things are not volatile, even though the market's gone down, especially the Qs, the technology piece. And then the market breadth, we made some progress on that this week with some of the bigger names in tech, either kind of treading water or making their way down a little bit. That is something that you've now seen some other players start to emerge out of the smaller cap types of stocks. And that's good. We want that. We want to keep seeing that number go up to get more participation. This rally is going to continue. So that's the markets. If we take a look at the calendar, let's start with the 17th. We had the New York Empire State Manufacturing Index come out positive for the first time I can really remember in a while. I guess it was up last month too, but you can see some pretty nasty numbers in there. And then we also have retail sales came in lighter than expected. And this kind of started, let me run back to the market real quick. I mean, I had some huge days in here at the beginning of the week for all the markets, Monday, Tuesday, Wednesday, especially Monday and Tuesday, really got the market going up. I didn't anticipate any of this happening. I was expecting the pullback to happen a little bit earlier, but now we're getting it now, at least in the Qs. But everything kind of went up, and then, like I said, it needed a rest. So going back to the economic calendar, some of these things were, it was just kind of a, nobody knew what to do with the numbers, but the markets went up. And then Wednesday, you saw, as I anticipated last week, the mortgage rates came down a little bit. We had building permits come in lighter. kind of began the kind of blase type of environment that the markets were in. Housing starts came in a little bit better than the negative 10% forecast, but still not a great number. Lighter here on what from a volume perspective on the housing starts. Initial jobless claims came in a little bit lighter. Philly manufacturing came in much worse, or a little bit worse than was anticipated. 10% versus 13.5%. Existing home sales down more, and like I said, yesterday we had the Qs went down 2%, I think, and probably another little bit today, and just kind of nothing really to move the markets this week. And then looking forward to next week, we have these S&P Global PMI for manufacturing. There's a composite combining manufacturing and service. Manufacturing has been, not great numbers for a while here. We had stuck our head back up in April from April's numbers above 50%, but pretty much, the last more than 6 months under 50%, which it means contraction. And then we have the PMI composite. We also have the Case-Shiller, what are home prices doing? Saying they're expecting to be down 2%. I've been hearing numbers that maybe they're going up. So, we'll see with those month over month. Maybe it's up, and year over year, probably down. Consumer confidence, again, that keeps coming in a little bit stronger, which is somewhat of a surprise. Wednesday, we have mortgage rates again. I would anticipate maybe they go down a little bit. New home sales, lighter than the previous month. But again, I'm hearing numbers that this number may actually beat on these on the forecast. And then we get the Fed rate decision. I think it's pretty well locked in. We're going to get a 1/4 point, and it's going to all come down to Wednesday afternoon when Fed Chairman Powell takes the mic, and what does he say about what's going to happen in the future? Then we have Thursday. We have durable goods, might move a little bit, but let's be honest here. The only thing that's really significant is going to be on Friday, other than obviously what Powell says on Wednesday. That's a market mover. And then on Friday, we'll get the PCE. And again, anything 0.2% or lower, the markets will react positively to. And so, yeah, that's kind of where we stand for next week. Wednesday and Friday will be the big days. I would anticipate that the market maybe bottoms here on Monday or Tuesday. It doesn't have to. It might take longer. Excuse me. And so that's what we can anticipate this week. Now, I'm almost afraid to show how positive the Fear and Greed Index and the investor sentiment is right now. But I've been following this, and this is kind of run pretty true. I've shown this the last probably 3 episodes. But, if we look to the next major monthly close, we got still tons of puts out here, much lower prices than we are now. And, this holds true. Let's look at in September, same for September. When you compare calls and puts are in red here. So we still got a ton of puts out there, and there is a certain negativity to the market. And then finally in October, we're seeing a little bit of a change here. But yeah, I don't see anything in here that would get me excited. I'm about the fact that we still got a lot of rocket fuel in there for with the puts, that if we start to run up, that it's going to push it even further. Verifying David Hunter's forecast, everybody freaks out when we get a little pullback, which is just typical. And but we got still a lot of puts out there for August. Got a lot of puts out there for September. And then I wonder what I didn't look at the October, see what it is. Still, we've still got quite a bit of potential fuel if this thing starts to really, go crazy north. I want to take a look. I want to see what the IWM looks like. If okay, that was for today. Let's look at next month. Yeah, still ton of puts compared to calls, and so this is kind of tells me more about what's happening is what people are actually doing rather than what they're saying. So with all these puts out there, it tells me that people are still pretty negative, even though they may be saying something else different. If we look at the Truflation report that I've been looking at, it's running about 2.13%. The government report is 3%. Start to see that number, government reported number, go down, and still watching this number to see if it goes negative. It might be a better indicator of whether we're starting to hit not just disinflation but deflation if this goes negative. And so that is pretty much it. The only thing I want to talk about is, I think, again, there's more downside here. And, we get this kind of stepped type of market, up, kind of went sideways for a while, up, down. We're in a down period right now. We don't want to see the Dow or the Qs go any lower than, like I said, right here, about 370 would be, I think, most people's expectation before it turned around, and that wouldn't damage the markets. It's where we start breaking below, let's say 363 would be a little bit concerning, but more concerning if we broke down here at 358. Then we have a complete structural thing. And there's been a little bit of volume here, which is, to me, why I'm kind of watching what's going on. The Dow Jones, we talked about it. It's just been going up, but again, I would expect something to pull back maybe around to 34.5 or so, and possibly as low as 34.3. The SPYs, I've got some places marked out, but we come down here to 445. That doesn't hurt anything. The only thing I would anticipate being real harm is if we got a break and hold below 431. That would be not good. We wouldn't want to see it go any lower than this because it breaks this step, right? Now this could be called a continuation. That's why I kind of say, well, I might get concerned around 437, be more concerned if we start dropping below here. But my anticipation, I'm anticipating that this 445-ish level for SPY is probably where it will end. IWM, which has been on this long tear, I'm just curious to measure it, from this level up to here, ran up 9 1/3%. That's a huge move. So it may stop here at 194. It's got some momentum behind it. There's another level, here at 192. Got another level, and all of these levels, these three levels, won't break really the pattern because we get basically higher lows throughout, maybe a double bottom in this area or triple bottom there, but we got higher high, higher low, about the higher high, the higher low, then we get a higher high, and if that's the pullback, then higher low, and then higher high. So we just need a higher low, not to break. Could be here, might be all the way back down. But I get concerned if we start breaking 188. That would be a little concerning on IWM, especially with how much momentum it picked up. That would affect the breadth. That would change everything in the marketplace. A completely different mindset. So anyway, that's kind of what I'm anticipating. We got still IWM, 20+% from its all time high. We have 244. We got over 20% to get to its all time high, whereas the Qs, the SPY, are about 6%, 7%, and the Dow Jones is now about 5% from its all-time high. So let's just measure that. Yeah, 4.5%. So under 5%. That's where it stands right now. And so things look actually pretty good. There's nothing negative. People get all freaked out when the market goes down. 3 to 5%. You're looking at it on a daily basis might be something that people are concerned with. But at this point, it's playing out. We reached those all-time highs, and a lot of people have anticipated this is it. We reached our high. This is, everything's going to turn around. Okay, you can make that argument, but I don't see it yet. There's no structural degrading to what we've seen. The higher highs and higher lows still intact, and they can still go down a little ways. Anywhere from 5 to 10% from the previous high on the SPYs and the Qs. And again, I'm anticipating some type of a pullback on the Dow also. So anyway, that's what I wanted to cover this week. And remember, there is always a better way.